Greek Prime Minister Alexis Tsipras to present new proposals to European leaders on Tuesday after the country rejected the terms of an international bailout. I'm joined by Paul Christopher, head of global market strategy at Wells Fargo. Paul, the clock is ticking at this point. What do you believe the European finance ministers need to see from Greece to come to an agreement?
Complete capitulation, Brittany. That's what the finance ministers want, and that's on orders, I believe, from Berlin. As far as the European finance ministers are concerned, there's no deal currently on the table. They have to start from scratch, and they're going to try to design an agreement that's exactly what the creditors want, which will be full of wage cuts and pension cuts, tax increases, and other reforms.
How optimistic are you that the appointment of a new Greek finance minister could help negotiations?
I don't think that's the main point. This is a concession from the Greek Prime Minister, but we have to remember that he's the one driving this car. He's the one directing this effort. He's the one who called for the referendum at the end of last week, I should say the previous week. So I think this is a token gesture, but not one that will impress the European creditors.
Of course, the outlook for Greece remains unclear amid fears it may be forced to leave the Eurozone. What's the likelihood of that happening, and what could result from it?
I think that it's now likely that Greece will end up not so much leaving the Eurozone, but adopting a parallel currency so that for all intents and purposes, de facto, Greece will be using a currency other than the euro. I think the impact of that has yet to be determined. Certainly markets have been pretty complacent about that. I think the consensus view is that Greece has been more or less ring-fenced, that the rest of Europe has set up all of the institutional and market measures that would be necessary to prevent a Greece exit or dual currency from adversely impacting the European economic recovery for an extended or sustained period of time. That's at least the consensus at the moment.
So do you expect an agreement to be reached today?
No, I don't. I think they will continue to try, though, and markets and investors should be prepared for some further volatility as these negotiations have further highs and lows in the coming days and weeks. But I think it's going to be very difficult. The way that the referendum turned out, the two sides have really strengthened the hands on each side of the hardliners, and it's going to be very difficult to get a deal.
All right, thank you so much. Paul Christopher, head of global market strategy at Wells Fargo. And I'm Brittany Humar for The Street.